who do you guys need to be today to be able to actually have the best experience? One of the things that I teach from a mindset perspective is the concept of be, do, and have. And some of you may have heard this before, but I'll repeat it again, is be, do, have is the mindset that anybody that I know is really embodying at a 8, 9, 10 figure level. And here's the example. In the context of the three types of people it'll impact. You have the victim, the worker, and the winner. And the victim doesn't think be, do, have. They think have, do, and be. So they'll say things like, oh, well, that's easy for JNC, that's easy for Marcin, that's easy for whoever, because they already have 20 units. They already have 100 doors. They've already raised 100 million. If I had those things, I could do what they're doing, and then I would be successful. Do you see what I mean? But you make yourself a victim because you're immediately thinking of the things that someone else has that you don't have, and because you don't have those things, you're ascribing your inability to do anything because you don't have those things. So if you're sitting here and you're like, oh, well, it's easy for Marcin. He's been at this for 20 years, private equity, he thinks he has good looking hair, all this stuff. If you fall into that state, you're immediately giving away your power. And all of this is going to be at a loss. Now, the worker, which is where most of us fall into, lives life like this. They think do, have, be. So they say things like, oh man, I just got to go do that. I got to get this commission done. I got to go incorporate this company. I got to do this. I got to do this. I got to do this. I got to manage this. I got to do this. Because when I do this, I'm going to have, a payout. I'm going to have a deal. I'm going to have whatever. And then I can be, more present at home. Then I can be calmer. Then I can be happier. Then I can be a better father. I can be a better provider. I can be and then as simple as that sounds, it's actually backwards, because any people I know that operate at the highest level always start their day with be, do, have. So they think to themselves in the context of, who's the person that I need to be effective as a father, as a leader, as a manager, as a marketer, as whatever it is, to be able to do what's required. So in other words, who do you guys need to be today? What do you need to be open to today to be able to actually have the best experience? And if you frame everything you do in life in the context of the person you need to become to be able to do what's required, the having is actually the easy part. It's actually a byproduct of everything else. It's a really hard concept to grasp, and I remind myself over and over again, because anytime I feel anxious or overwhelmed or like it's too much shit, it's too much pressure, there's too many things going on, we all have it. By the way, guys, when you get out of here and you do your first 10 unit, your 100 unit, first 1,000 doors, first 100 million AUM, what ends up happening is you realize that all it is a number more zeros. That's all it is. It's just one more zero. You bought your first 17 units. Now you're like, okay, one more zero, right? How do I do 107 units or 100 units? So it's just one more zero. And that mentality is the person you need to become to be able to do that. Because once you become the person that can do what's required, the having, the outcome, is just a byproduct of it. People are like, are you excited you bought this building? I'm like, no, I knew we were going to buy this building. I'll be excited when we buy the next 20. Right? Like, this is the formula for me. Right? So that's the mentality. So for you guys, depending on where you're at today, is who do you need to become to buy your first 100 unit? Just to buy your first 100 unit or be part of your first 100 unit. The next challenge, some of you in the room might be, how do I do one of these every 3 months? And then, how do I build a 9-figure portfolio? Because you become a different person all the way through. The person I am today is drastically different than the kid in his early 20s who was raising capital and would drive 3 hours to go pick up a $10,000 check before the investor changed their mind. That was my state. That was my mentality. For those of you who don't know, like, the smallest check I ever got was 10 grand. The biggest commitment I ever had was $100 million. So I'll fly for a $100 million check if I know I'm getting it. Versus 20 years ago, I drove 3 hours to go pick up a check for 10 grand. I became a different person, totally different person. I have my buddies saying to me, man, you've changed. I'm like, I fucking hope so. Like, I don't want to be the same person I was 10, 20 years ago. Like, why are you trying to bring me back to high school or college or university or whatever it was? I don't want to be that. So try that next time. Somebody says to you, you've changed. I hope so. You don't have to swear if you don't want to, but I hope so. Finally, whatever you guys focus on expands, so focus on the right things. Tony Robbins says it best. He goes, too many people major in minor things. It's one of my favorite quotes for him. Too many people major in minor things. So when you focus on whatever you focus on expands. With that in mind, I'm going to give you guys some context for the rest of the day here. So I started in this business in 2008, and the interesting thing is back then there was a massive over leverage in the market. There was a lot of affordability issues. And finally, there was a massive crisis in confidence. Like there was no confidence in the marketplace. I was telling Kim, when my partners and I, we started our first, it was for me, it was my first 8-figure equity fund at the time. We were buying half-empty medical plazas in Arizona, Mesa, Chandler, Goodyear, all these suburbs of Phoenix. And at the time, for those of you who don't know this, and it's still the case today, when you buy retail or office, it's not a function of NOI alone, it's a function of what the potential NOI is, even if it's empty, and then you pay for it as if it's already full. That's just how commercial and office works. So here's how dire the situation was. There was no confidence in the marketplace, and there was no financing because banks are trying to figure things out with the loans and houses and all this stuff. That the people that did need to sell these medical plazas that were half empty, by the way, were selling for pennies on the dollar. So literally my partners and I, we went in and we bought up a whole ton of these 10, 20,000 square foot plazas for $1 million, $2 million. When we sold them, they were $4, $5, $6 million bucks. My only regret was that we sold in 16, 17, because if we held on to those things, we could have refied them 3 or 4 times over. But you know, my point is, because there was such a massive crisis in confidence, we had an opportunity because we were very, very focused on what we were doing. Now, Mark Twain has a good quote: history never repeats itself, but it sure does rhyme. And I think we're about to have a repeat. We're already going through it. I'm literally getting calls from, well, first of all, I'll give you some of the symptoms. Obviously, you guys know about the higher interest rates. Like I have people celebrating on Facebook where they're like, oh man, 0.25, time to buy. I go, dude, you're underrating is shit. Like, what are you talking about? Like, how does 0.25% make your deal? It doesn't make sense. Like for you to get back to where the sellers still are mentally for your prices to catch there, you need another 2-3% reduction, not 0.25% reduction. So we have higher rates. Now the funny thing about higher rates is they're not really high, they're just normal. These are normal rates. If you look at historic 30, 40, 50 years or longer, these are normal rates. Actually, they're slightly lower than normal rates right now. 6.5, 7, you got it. Those are normal rates. And brokers who before, Zoria, when we were negotiating on the first few properties, they're like, oh no, this is our price, this is what it is, this is what we're sticking to. Now they're openly advertising discounts. 30%, 30, 40% discounts against the crazy pricing they had before, mind you, but they're openly discussing this. Brian and I were in the car on Wednesday, we were driving around looking at some other properties. You could hear the desperation in their voice. Like, you know, when somebody hasn't had a win in a while, you can hear it in their voice, like their confidence is shaken, their voice is cracking. There's a lot of that going on right now. These guys are hungry. They haven't sold anything in the last 24 months. Commercial mortgage brokers, I know a lot of guys that are getting laid off because all these guys have like a retainer that they get paid and it's supposed to true up against their commissions. They're not earning commissions because they're not financing deals. So they're getting laid off too. So all the symptoms are there, but all the smoke before the fire is like it's there. Like I just don't know when it's going to happen. It could be 3 months. It could be another 12. We don't know. The election's coming up here in the U.S., so they may try to, push that down a little further and, see what they can do with that. But ultimately, all the symptoms are there. Here's the other major elephant in the room: is there's loans that are maturing. Fun fact, in Canada as well, on the residential side, CBC of all places just put out an article where a bunch of homeowners, their mortgages, for all you Americans, you're going to laugh, but we had mortgages at 1 or 2% in Canada, residential. These people are now resetting for 6, 7%. And in Canada, you can't get a 30-year home mortgage. It's 5 years. It's 3 years or 5 years. On the US side, that same thing is happening on the industrial institutional side. So here are the 2024 loan maturities projections. Multifamily, over a $250 billion in multifamily loans are maturing this year. About half or 2/3 of this is already on the table. Office is a pretty large one, retail, institutional. And on top of that, another $570 billion is for 2025 and $460 billion in 2026, roughly in the same proportion. So what does that mean? Well, I can tell you that a lot of people in the multifamily business were buying properties with high interest rate, with locked in low interest rates, longer term stuff. All that stuff is maturing now. The Burke Apartments, I caught myself, was one of the guys that literally got caught with a high interest rate loan, and that's why they became so motivated to sell. So when you have a combination of no confidence in the market, you have banks that are actually starting to become problematic because the banks, when they invest in this type of stuff, it becomes part of their capitalization, it becomes part of their assets. Banks have to have a certain amount of assets. So when these guys start defaulting, which they are, and the equity gets wiped out, next is the bank. I'll give you an example. Brian and I drove a property on Wednesday, smaller property, 120 units, and they bought it for $12.6 million in 2022. The debt on it is 8.7. And they asked me if I would just assume the debt and take over the property. I wouldn't even give them $6 million for this thing. So that means that the bank is also going to take a loss on it. Not a full loss. The investors are wiped out for sure. Like there's just no way out for the investors. They're cooked. But the bank, if they're going to take a $1.5 to $2 million loss, that's a 10 to 20% hit. They've got thousands of these loans all across the US on so many properties. I was talking to my commercial guy yesterday. There's another property, for those of you who are familiar with Louisiana, their multifamily out there is, 100 grand would be like really high-end stuff. They were lending 70, 80,000 a door on like 30-year-old product. Like their loans were more than the property was ever worth. I don't know how this happened. So there's going to be a massive correction on the institutional side. I share this with you guys to say what? There are opportunities coming, and the thing is you have to be ready for it before it comes up, or be part of a team that's ready for it before it comes up.